Good morning and thanks for tuning into the Trade Setup. I'm Neeraj Shah. The US markets did very well. We'll just get a brief snapshot of the US markets first and show you how they did overnight, 2.5% higher for the NASDAQ. And that should bring tech in focus, but the S&P 500 not a bad day either. If you just look at the other indicators too, will come up on your screen in a moment. The yields are steady at about 3.5 or 3.55. Volatility 23.23, slightly lower than yesterday, and the dollar index is steady at 104. Keep in mind the biggest news flow is that the ECB's hiked interest rate by 50 basis points. The biggest US banks have pledged $30 billion of deposits to rescue First Republic, which led to the US equities notching up the largest one-day advance since January. And oil prices too have marginally settled higher. Let's first get a global perspective before we talk about our markets. Quick view from Seth Freeman, a veteran, needs no introduction, joins us right now on the show. Seth, good having you. Good evening. Thank you so much for joining us all the way from San Francisco.
Thank you. Good morning.
Thank you so much, Seth. So is this a pivot that the markets were looking for? Or is it difficult to say that right now?
Well, I think it's still a little early. I'm here in the San Francisco Bay Area, and I have many friends and business people who have banked at First Republic, banked at Silicon Valley Bank. And we're not out of the woods yet because actually First Republic is trading down significantly in after hours in spite of all of the support it's getting.
Okay. So what's the sense then, Seth? I mean, the belief is that this probably brings the Fed or central banks to pivot. Now, we've seen the ECB has not done that, but they've cited that Europe is different from the US in the impact that SVB has. So do you think the Fed might sing a different tune? Is that what the market is largely anticipating? Because the bonds have rallied already. Have they done a bit too much?
Well, the banks, in reading some research tonight, the prediction is that we may be only looking at about 25 basis points instead of 50 because of the kind of turbulence we're seeing and the basic, lack of confidence. The situation here is we still have, high inflation. It's gone down slightly, and we still have, in spite of reading about layoffs, particularly in the tech sector, we're still seeing a decent level of employment and new job creation. So it's conflicting data points.
Yeah, and therefore it makes it interesting, Seth. So my question to you is, to your mind, is this 25 the last? Jeffrey Gundlach seems to believe that. A few other people believe that for large hikes are off the table. Are you in the same camp?
We may see a breather. I think it really depends on what happens this summer. We typically have spikes in oil prices in the summertime. And there are retailers that are in deep trouble. I'm primarily these days doing restructuring work. And there's a lot of negative news out there. And certainly consumer spending has slowed down. And also consumer debt has gone way up. We're going to see a lot of problems for both businesses and consumers that need to refinance their existing debt that may only be, at half the interest rate they're going to see when they go to refinance. That's going to put a lot of stress on businesses across the board.
So let me ask you, Seth, before we wrap up, are you constructive on risk assets like equities, especially in the US, or are you neutral currently?
I think you need to be. It depends on your time horizon, right? But I think if you have stamina, you could probably find some good value right now. But you have to be a risk taker because I don't think we're out of the woods.
Great. Okay, Seth Freeman, really appreciate you taking the time out and joining us all the way from SFO. Have a great evening.
Thank you.
All right. So viewers, we just thought it'll be important to get somebody who's an expert in this area to just give us a sense of a post ECB surprise of a 50 basis point surprise, because maybe the market anticipated it to be otherwise. But the equities, despite the fact that ECB did what it did, even Europe closed higher, by the way. Let's bring up the SGX and just give you an indication of what would be the claims. So it's trading with gains of about 0.7%. So this is in or around the levels that we were yesterday before we succumbed to some selling pressure. So let's wait and watch. If there is, continuation or building on from these levels, and whether post that, do we see a pullback again, or do we see a close which is above some key closing levels? Frankly, I mean, that's my trade setup for the day. That the strong global markets and the lower crude prices augur well for indices, but it's very important for the Nifty to close above select closing highs for the market to believe that this could be a trend move. Otherwise, if it's much like the session yesterday, while we eked out gains, but it was a day to my mind that was a day of losses, because yes, I mean, we started lower, then went up all the way to 117, 100 odd, 120 odd, and then came off pretty rapidly. So one hopes that that doesn't happen today. If you're up from a bull perspective, that is. I think what the market's looking for is beaten down pockets. So insurance, real estate, media, they're starting to turn. Metals haven't, but the others are starting to turn. It'll be very interesting to see if there is a bit of a build down to some of these pockets in the session today as well or no. FIs sold about 282 crores, so not a very large number. It was 3,000 crores, I believe, day before. So yesterday, about 282 crores is okay. The DI purchases continue, about 2,200 odd crores worth of buying done by domestic institutional investors. So that's the long and short of the market move. Now let's talk about the specific stocks to watch. The big surprise came in from TCS. Now most of you know of the news, but for those who don't, uh, here's the thing: Rajesh Gopinathan, the man who is leading TCS, has quit as the CEO and MD, and K. Krithivasan has been named as the successor. Now, apparently, it's cited that Rajesh Gopinathan has quit to take a break. That's what brokerages who uh, who have spoken to some management sources or whatever inside TCS are reporting. Now, keep in mind at 8:30, you will hear Rajesh Gopinathan speaking to the media, and it'll be interesting to hear from him the reasons. Though I think it's a foregone conclusion, let me tell you that. But it's an important one. It will happen at 8:30 right here, so you can kind of tune back if you want to watch it digitally, of course. Now, I was trying to think of what the impact of this could be, and I'm standing on the shoulders of Morgan Stanley to do this. Now, they're saying, their note is saying that Rajesh was appointed as the MD and CEO, reappointed in 2022 for another 5 years. And therefore, in that context, the announcement of his resignation was unexpected. However, Morgan Stanley says TCS is a deep management bench, as reflected in internal candidates heading the company whenever CEO changes have happened in the past several years. For people who don't know, Mr. Ramadurai to Chandra to Rajesh and now to Krithivasan clearly shows that strong internal pipeline, not depending on external candidates. But they also say that the last time TCS announced an unexpected change in the CEO position on 12 Jan 2017, along with its results, the stock corrected by 4%, underperforming the index. However, over the next 15 days, as companies reported results, the underperformance of TCS changed into outperformance versus peer group stocks, and TCS narrowed its underperformance versus the Sensex as well. So, well, that is the piece that is interesting. So, could TCS have a dull day today? And could it recover as time goes by, as normalcy returns? So, because I'm guessing they would have thought it through, out and out, and they probably in their wisdom would believe that things will continue as normal very, very shortly, so, or if not already. So therefore, to watch out for this. This could be an interesting day for TCS. Interesting next few days for TCS. Today, very likely, the stock may underperform a little bit. I somehow don't think it will, but you never know. Formal announcement from Zee came in post-market hours that they've amicably settled the disputes and claims with operational creditor Indian Performing Rights Society. And Zee has also denied this Bloomberg story that the companies agreed to repay dues owed to IndusInd Bank in a bid to resolve insolvency. Though I do believe, formally denied, but I do believe that they will do so. And therefore, while this is a formal reportage, keep in mind that Zee has already gained about 8-9% or 10% in trade yesterday. So therefore, I don't think this announcement by itself makes a meaningful impact on the Zee Entertainment stock. Now, the reason I brought this up is to just tell that for people who might not have known, Zee had a big move yesterday on this precise piece of news. So be mindful of that if you are trading Zee Entertainment, and if you're thinking of doing a fresh start. A large portion of this impact has probably happened. But This shows that Zee is moving towards resolution, and that should actually help the stock. It's not an expensive stock. Valuation wise, market cap wise, one of the largest players available at the kind of numbers that it is available at. And if the merger with Sony goes through, which is what the attempts would be, then I reckon it should augur well for Zee. So be mindful of that. Voltas, the subsidiary Universal MEP Projects and Engineering Services, which is a wholly owned subsidiary, is backed on multiple power distribution and solar projects worth 1,770 crores in various states in the country. So do watch out for Voltas in the session today. Might react positively. Glenmark, I'm unsure, but I'm bringing the announcement to you. The company's received US FDA acceptance for investigational new drug application to proceed with a phase 1 and 2 first in human clinical study for treatment of patients with advanced solid tumors and lymphomas. We do hope and pray that Glenmark succeeds, but this is just a clinical study. I don't know how much of a financial impact it has, but who knows, the stock may react. Just thought I'll bring it to you. I confess, I do not know what this would mean for Glenmark Pharmaceuticals, the stock. Stocks in focus are HAL and Bharat Forge. Now, apparently, let's move this plate out. Just listen to me. So, because this is not officially the piece of news, but reports suggest that HAL is the biggest beneficiary of a large order from the Defense Ministry. In fact, Bharat Forge is, as a Morgan Stanley note suggests, is most certainly a beneficiary. HAL potentially is a beneficiary as per some notes, but I don't have any confirmation from HAL per se, and therefore I can't lay out. No brokerage is also reported on this, so I'm a bit reluctant to talk about HAL being definitely a beneficiary, but supposedly a big beneficiary of a large Defense Council order, and therefore do watch out for both HAL and Bharat Forge in the session today. They could be reacting to this piece of news. If they react, you know why they are reacting. Then DLF. Now, first a trade perspective, then a brokerage perspective. The news officially is, of course, that the luxury project of DLF Arbor, sold out in 3 days. Now, MK has come out with a trading record on DLF. They are saying it was a top gainer amongst realty stocks yesterday, 4.8% to close at 360. It's currently trading below its 200 DEMA, which is 467. But the RSI closed above 50, which indicates bullish momentum building up in the stock. So they believe that there is some more way to go for DLF. But now, the reason, of course, is that the luxury project Arbor sold out with 95% primary sales. Morgan Stanley's come out with a fundamental note on DLF. They stay overweight. The target price is 417. They said the luxury project achieved pre-sales of over 8,000 crores in 3 days alone. They estimate 50 to 55% gross margin for this project. And they believe that the company choosing sales velocity to help in faster liquidation of its large land bank strengthens the cash flows and improves the ROEs for the business. So they are overweight, and the move has happened, of course, but likely Morgan Stanley believes from the tone of the note that it could do more. MK certainly believes so from a trade perspective. So to watch out for DLF could be interesting. It ties in with the thought process that I was presenting day before yesterday about peak rates, and who knows what could happen to real estate as well as NBFCs. ICICI Prudential Life, big move yesterday because of the succession planning. Now, the technical parameters here, it closed at 409 with OI increasing by 8%. Now, remember, the stock has been in a continuous downtrend since September 22nd, 2022, declined by more than 35%. It made a new 52-week low on Wednesday and then has bounced back 6.5%. It's closed above its 20-day moving average with traded volumes nearly 7 times the weekly average. So this announcement, of course, has brought about a big trading shift in ICICI Group. Can it do more? Remains to be seen, but just thought we'll bring the parameters to you. Before we wrap, Chris Wood's Greed and Fear spoke about India versus China. And he said that India remains a much more straightforward long-term story than China, which is why Greed and Fear is 39% of its Asia ex-Japan long-only portfolio, long-term in its focus, invested in India, and only 25% in China. He goes on to say, of course, that China is not uninvestable, but it clearly shows that while China is a much larger economy, somebody who's global in nature, which is Jeffries and Greed and Fear portfolio, much more allocation to India vis-a-vis China. Could others do that? And imagine what happens to markets then. Take some time, really. But just thought we'll bring in Chris Wood's view. Nevertheless, so that's the long and short of the trade setup today, viewers. some teji. Watch out for IT. Morgan Stanley's revamped their portfolio as well. I think Cyient and then one more LTI have been upgraded. HCL Tech moves to the top of the list along with one more stock, and not TCS there, Infi, I think. So lots happening in IT, some stuff in defense, maybe media, which was very active yesterday. All of these remain in focus. We have a bunch of conversations lined up today, so you want to tune in for some of those as well. And of course, at 8:30 a.m., do tune in for Rajesh Gopinathan's first interaction. The incoming and the outgoing TCS CEOs talk at 8:30, so you want to tune in for that for sure. Thanks so much for tuning into the Trade Setup. Have a fabulous weekend ahead as well, and see you with some market conversations.